Right, everything looking good. We are live. Let's go ahead and get this party started. Somebody let me know in the chat. Everything's coming through loud and clear. Looks good on my end. Got lots to talk about. So obviously, before we get started, hey, appreciate that, J Hoff. Before we get started, none of this is financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. Welcome back to the channel, Crypto Trend Trader, with our Friday morning market wrap up. It is 11:04 a.m. Eastern Standard Time on 11/11/2022. And the thing about not being financial advice, also, we're going to talk about some important topics as well, not legal advice. So if you're looking for any advice at all, maybe don't look on the internet. All right. So obviously the dollar is melting down. DXY is cratering. It's going straight to zero. Everybody was right. All the dollar bears. It's literally, cratering. It's already down to 106.7 from the peak up here at 114. So, it's not at zero yet, but it's starting to look like it, is what the bears would say. And you can even go down to a shorter time frame and see, we broke down below the 200s on the 4 hour, back tested, put in a lower high, came back up, back tested it, and then broke down to a new low. So now when we go back to our longer time frame, we can see what levels we're going to pay attention to. But it's very, very clear here on this chart with the TJD master on. We know exactly what's happening. We're coming down for the 200s retest. We're in a bull market. On the daily, we're going to retest the 200s. At some point in time, we're going to bounce up, potentially put in a lower high. And then after that, break down, go into a bear market. Or maybe not. Maybe we'll bounce and find support. But the fact of the matter is, this is our weekly. We talked about a retest of the 21 not happening since back here in January of 2022. And now, we're pretty deep through the 21. And this closes in 8 hours. This is a big deal. It's not crazy to think, hey, we're confirming into a bull market. This thing potentially long term could come back down to like 98, maybe 100, depending on how long it takes to get there. If it's 3 weeks and we go straight down, that's it. 98, less than 100. I would imagine 100 would be pretty strong support. We're seeing, obviously, the 821 cross would potentially happen. Now, we're not just going to go straight down. We're going to potentially push back up. We'll see where today closes, et cetera, et cetera. But 4 red histograms, potentially going to lose the slope line on the weekly. Hard sell signal coming out of the bullish control zone. Dollar picture is starting to be painted. Now here when we get to the monthly, obviously we still have 3 weeks left in this month. Still very bullish longer term, just like the weekly. Still very bullish longer term. But here we pull back, we're at the 8. So you would imagine the first time we test the 8 on the monthly, that's going to act as support. That's going to act as support, at least for a temporary bounce. So I think it's very likely we close the weekly right around where we're at right now, 106.7. We had said basically somewhere in between 108 and, 105, 106. So it seems likely that's going to be our target, the 200s, and then also those key levels we'll go to on the shorter time frames. And obviously, this is the number one precursor, the one thing that we have been saying over and over again that is an absolute requirement for the dollar or for equities to rally and have sticky rallies is this exact thing right here, the DXY weakening. So we had this ascending support line. We now, after a third lower high, broke down from the support. We back tested it. It failed. And now here we are at key fibs. We have 2 in a row right here. We have another one slightly lower. And then we have the 200s. So obviously at this point in time, we've been talking about it. And here it is. And at the same time, we come down here. Now, again, we weren't expecting, obviously, to get here this quickly. But that's what happens when everybody's on the same side of one trade. And then the trade flips. It flips quick. Because everybody's on the wrong side all of a sudden. So now we do have to watch for momentum and how much energy we're using up on this pullback and everything like that. But in the meantime, who cares? Because we're looking for the actual momentum. The 821 have crossed bearish. We're coming down here to 200s. So is the dollar going to go to zero? No. Is it, 105? Maybe down the line, 98? Without even threatening the bull trend, those things could happen. So DXY, the way I'm looking at it right now, short term, we are seeing a little bit of signs of potential exhaustion. I wouldn't be betting on this thing to go much lower. I mean, we're basically at the target. We've been talking about it. We're here. So now that we're here, you don't want to be like, oh, look, dollar's getting crushed. I think I'm going to get in on that short too, or whatever, however you're going to play that. Just not the time to be getting in. Should have been getting in on the lower highs. Should have been getting in on the back test of the breakdown. Now is not the best time. And, maybe that translates to equities. The dollar has had a pretty violent move to the downside. Everything else has pumped pretty big on, inflation peaking, on a potential Fed pivot or a pause or whatever they're calling it now. The potential increase of rates, but at a slower rate. That's basically what people are getting excited about if we potentially went 50 in December. Do I think we're going 50 in December? No, I don't. I think nothing has changed at all. Matter of fact, the stronger the equity markets are, the easier the Fed's job becomes. And we've been talking about this the whole time. As long as the market's holding up, Fed's job becomes easier. The big thing is if they do break something, and they're not even as concerned about the stock market, it's more about the bond market. So if the bond market all of a sudden is not looking as bad, it makes the Fed's job easier. So TNX, obviously 821 bear cross in full effect right here on the daily, broke down again pretty violently. And we know what that means. We know TNX and DXY are the two pieces of the puzzle that can allow equities to rally. So we have that previous low here at about 357. That's the next area we're watching for. Obviously, if this thing decides it wants to come back down to the 200s, that's a way to go. How could this come down for a deep retracement? I mean, essentially what's happening now when we see this retracing is the market is saying, oh, the Fed is going to pivot. We're never going to reach. The Fed target rate in March is like over 5% right now. I'd have to look to see what it is. But if you look at the projections, if the market was priced in 5% in March, and now all of a sudden it's like, oh, actually they're probably just going to go 50, and then maybe they're not going to do anything, and then maybe it'll only be 25 after that. So now all of a sudden it's like, oh, well, actually we overpriced the bearishness, so now we're suddenly bullish. So again, it's a difference between perception and reality, or expectations and reality. Those are the two things that people have the most trouble with. So we know what to look for on TNX. Again, daily looks bearish. Look at, you remember we just talked about this the other day about the histogram coming up. You can see where we started drawing the histogram, obviously, but we talked about a pushback up, an attempt, and then a rejection and breakdown. Obviously we can see if we delete the, hypothetical line and we look at this one, obviously it wasn't nearly as strong as what we talked about, but look exactly where we said the slope line. This was us projecting out the slope line into the future and where it would cross bearish. And oh, look, exactly where it was on here. So just, random, but interesting. So they say, basically exactly what we said happened with the yields. No surprise. You wait until after the meeting happens. This breaks down. The dollar weakens. We see a surge in, obviously the other end of the DXY, the British pound, etc., which is at 30, 50-year lows, something like that compared to the dollar. So it's not crazy to think that we're getting this move happening right now, but there's potential setting up that this could be a legitimate trend shift. Still very early to tell, and I don't want to get people excited for it, but let's look around and see what else is going on. So we know the two big precursors for a sustainable rally in risk on or equities was weakness in the DXY and weakness in yields. And that's big. It's particularly big for, risk on assets. Now, unfortunately, while this has been happening, crypto has been getting absolutely wrecked. Now, it did have a nice bounce back, as we discussed. We even saw FTT bounce like 100% from the low to the intraday high. So, a lot of what we expected to happen, what we talked about happening, did play out. So now let's see what's going to happen next and see what the next big move is going to be in these markets. Now, in the meantime, we have to watch to see, is this rally going to be sustainable? Are we going to continue to the upside, or is this the, another kind of dead cat reflex, etc., off of the potential that inflation has, peaked? Now, when I say inflation has peaked, at this point in time, we have the two main data points that we've been looking at, that everyone's looking at, which is core and then just, straight up CPI. So CPI had been coming down already, but the Fed was saying they were looking at core, and core came in under expectations and down slightly. So while it's still ridiculously high, it's at least coming down. So that is good. Now, the problem is with the trend, obviously, is the first time you see weakness, the first time you see the trend put in, lower highs a couple times, does not mean it's the end of the trend. So that's what we have to be careful for. That's what the Fed is worried about. That's what Jerome Powell is watching. He's trying to make sure that the Fed doesn't pivot too soon. Inflation shoots back up, markets shoot back up, and then we end up having even more inflation. And then now it's just, instead of all the work that they've done to get to where they're at right now, now they're starting all over again because inflation's going back up. So that's the last thing that they want to happen. Now, obviously, at this point in time, too, when we see what's happening with Congress, likely at this point in time, now it wasn't some crazy domination by the Republicans, which doesn't surprise me. Half of the fucking candidates they put forward were like loonies. I mean, come on, people, get your shit together. It's absolutely disgusting. And if you're not from the United States, obviously, or you don't follow the politics here, divided Congress is good for the markets theoretically because nothing gets done. No new laws, no new taxes, no new whatever. So it's less risk of, uncertainty. And right now, when everything is risk of uncertainty, the market takes comfort in that. Unfortunately, the problem is if we do go into recession, especially a deep recession, they're not going to be able to get anything done, or they're going to have more difficulty getting stuff done. They can't use reconciliation, etc., to help the quote unquote people or businesses or whatever the issue happens to be in this recession. So we'll see. Oil, what did we see happen here? We broke down from the ascending channel right here. We hit twice on the 200 exponential. We're coming down. We're still putting in a higher low. So we have a low. We have a higher low here. We broke down from the support, but we still have a higher low for now. So this could very, very easily continue back up and still get to our $98 target. We don't want to just assume that that's it because we came up to that same level and, kind of look like we might top. The fact of the matter is, and we do this over and over again, you see it on just about every chart. It's not like some super complicated, theory or like, rules that you need to learn. We're just looking at the last swings. It's super fucking simple. Super simple. Okay, we have a swing right here. And then when we come down, we're looking for a higher low. And we do. We put in a higher low. That becomes a swing then. And then we move to the upside. And then we're looking for a higher high. Oh, but we don't get one. We don't get one. We swing back down. And then where do we go? Oh, back to the bottom of the range. So this is the range now. This is our focus. We're laser beam focused at this level right here. Until either support breaks or resistance breaks, we're range bound. We're just going sideways. And that's what's been happening now. Now we have multiple data points in that range. And then if you want to get cute, okay, you want to get fancy, you want to start saying, hey, you know what? Horizontal lines aren't enough for me. I need something more. Okay, I need more excitement in my life. All right, like horizontals are great. I like them. They're fun. They're exciting. Everybody looks at horizontals. But I want a little something extra. Okay, and then you can just, throw in a couple little wedgies like this. No, I don't think wedgie is the correct term. I think that's what a bully does. I mean, is there a such thing as like a digital wedgie? What do kids do to each other now since everything takes place in the metaverse? I don't even know. Can you give somebody a wedgie in the metaverse? So that's it. But regardless, yeah, we're kind of squeezing here in this little flag in what amounts to a bearish pattern. Sure, we're doing that. But the truth is, until we break through, the yellow resistance up here or the yellow support right here, we're really just range bound. Because if we break down right here, if we just got rejected and came back down to the range, sure, it would look like we broke out of this little support right here. But the truth is, it doesn't really matter until we put in a lower low. If we put in a lower low, then it's like, oh, that was just a dead cat bounce, and now we're going lower. So that's what we're watching for. That's what we're paying attention for. I still think oil's going to move back up to the upside, but, we'll see, obviously. If we take a look at the weekly chart of U.S. oil, WTI crude on the weekly, we'll see. Again, we just had this descending channel. We got a pretty aggressive move to the upside. One leg up, an A, one leg down, a B, and then likely to put in another leg up. That's our C. And then that would just be an ABC correction inside of, what amounts to like 1, 2, 3, which is basically a macro correction for a big move up. And then theoretically, resumption of the bull trend. So here on the weekly, let's take off our, all right, so we have this descending channel. We backtest the moving averages. We get a push up here. Let's say we get rejected. We come down lower again. The market says, oh, we're not ready to go higher now. So it rolls over and then it threatens the lows. And then we come down here, likely hit the 200 exponential or simple, somewhere in the mid to high 60s, possibly just low 70s. Just a slightly lower low than that 79 low, or, wick-wise 76 low. And then all we have is just an ABC correction before we go higher. And then where does that correction take us? Now this one, there's not a lot we can do with this chart. I'm just going to use that last close, and I'm not going to use the little, wick down to like 0 basically. Now, I don't like to do that. Ideally, wouldn't have to do that, but unfortunately we do with oil. So, that would be potentially in the low to mid 60s, is like that would be the 382 correction. Again, depending where we're kind of going from. All right. So we'll see if it gets down that low. We shall see. But again, looks to me, textbook correction before continuation. 200 exponential just crossed over the 200 symbol on the weekly. Multiple green histograms, hard buy signal coming out of the bearish control zone. It's trying to make a move up here. It is trying to make a move up here. Yeah, I mean, if we start really putting in an aggressive move, then we can start talking about the possibility that actually oil has already bottomed. Doesn't seem likely, though. It looks like we're coming up to either the 0.5, possibly the 618. I think 100 is going to be a hard stop on oil prices for now. So that's what I would look for. So VIX, all right, so we talked about this. We broke down from support. We back tested that support as resistance, and then, pretty aggressive move down here saying that, hey, look, that's it. The markets are happy with the way things look. They don't need downside protection. So, DXY weakness, TNX yields coming down, bond market surging, equity market surging, crypto having its own meltdown. What a shame. Sam Bankman-Fried and CZ Binance. What a shame. They have really destroyed a lot of credibility in the crypto space, one. And two, they have done this at possibly the worst time. Because honestly, Bitcoin and crypto really could have been, should have been, would have been setting up for a massive rally, as it's been correlated to equities like, almost like 1-to-1. So the fact of the matter that this happened at the time when crypto would probably be rallying pretty epic right now, it's a damn shame. And we were talking about this in the group in advance, and I was warning people. Obviously, I've been talking about the trap door forever. I didn't know this is how it was going to play out. I may have made some premonitions or predictions, whatever, about Sam Bankman-Fried. But I mean, let's be real, okay? I'm not a fucking scientist. I don't know a lot about Sam Bankman-Fried, okay? I'm not a psychologist. I haven't studied his mentality. But let's be real, okay? You start telling me about, billionaire prodigies, okay? And they look like they just crawled out of their mother's basement. Yeah, I'm just not buying it, okay? You show me like the most motivated, most successful, like most great people in the world, and they don't look like Sammy B, okay? They don't resemble sloths. They look like fucking hunters, all right? Like savages, all right? They look like, pro athletes, gorillas, fucking lions. Like, I mean, they don't look like Sam Bankman-Fried. And you're like, no, in the metaverse, he's huge and ripped and just so strong. Get the fuck out of here. But anyway, I mean, the fact of the matter is, bad timing. But this, we were talking about in the group, this is just literally just Roger Ver, fake Toshi all over again. Exactly what happened. We're going sideways at 6K forever. Everybody's saying this is the bottom. Bitcoin's carving out the lows. And then Roger Ver and Craig Wright start having their little tiff, their little girl fight, just going at it publicly, okay? Like ex-lovers. Let's be real. The only people that fight publicly are lovers. Okay, which is fine. If they're lovers, that's okay. I don't know that for sure, but facts are. I'm sorry. The breadcrumbs lead us to think that maybe there was some weird stuff going on there, which is fine. But what happened to the crypto space? Capitulation from 6K to 3K. So does this seem like the exact same thing again? Sammy and CZ, best buddies, hanging out. He helps him get the FTX going. And then next thing you know, they're tiffing on Twitter. Maybe if you're a CEO, just like, don't fight with people on Twitter. I don't know. That maybe just some general advice to people. I guess you could take that. Just ridiculous. But, same thing. Same thing again. Crypto eating itself. It's a snake eating its tail. That's exactly what it is. Because we're not bringing extra, money into crypto with this stuff. They're just basically destroying the credibility of it. So, absolutely pathetic. But VIX, same exact thing. We're looking for if VIX comes down below that previous low. That's all that matters. If we take out that 1959, the melt up, full on melt up in effect. So we'll see what it looks like in a few days. But let's be real. This rally has had more legs than I expected. So here's Dow Jones on the daily. This thing has been absolutely surging, outperforming everything. And then yesterday we saw the other major indices, bounce up, have nice moves because they were like, hey, you know what? Actually, the Dow is right. Let's fucking go. Inflation top, according to the markets. But again, most important thing, taking out this high right here. But again, let's be real. If we take out 34K, this high right here, we're fucking going to new highs. It's not a fact. I'm not saying 100%. But, let's be real. We had this descending resistance. We have the 200 exponential and simple. Dow is surging right now. Dow is surging. It's very, very strong. Now, obviously, the key level to watch is, do we take out that previous high? And if we do, I'm telling you, everybody's going to be thinking the same thing I am. We're probably just going to new highs. And it's not that crazy. It seemed like, a long, long time ago, we had... Oh, you know what? I probably have cleared my chart like 46 times since then. We have a Dow target up here, up higher. Oh, no. I think the long-term stuff is still on here, isn't it? Huh. I don't know. I'll have to pay attention. Obviously, I don't plan anything on these streams, so. Oh, okay. There we go. We got a box up here. Yeah, like 50K Dow. Now, I don't know if we're going to get there now. That was when we were still in like the pretty aggressive bull market. But there was another fib extension up there. We'll get into that a little later, at a later date, not like later today. But more importantly, this thing looks pretty damn bullish right now. Now, again, we're looking at one thing and one thing only. And it's literally all that matters right now. Because right now we basically have bullish divergence playing out right now, moving to the upside. We got to take out this previous swing high. If we take out that previous swing high, though, it's going to look real good. 33,745. We're crossing the 821, potentially back to the upside. Close the weekly in like 4 days with bullish divergence potentially playing out right now. Markets right now, and this could literally change, the markets right now are looking like they're setting up for a potential retest of the highs, at least the Dow Jones. Now, again, we did see this cross happen here, and then it get reversed. We saw it happen here. It got reversed. But at what point in time is this a dead cat bounce? And at what point in time is it, an actual legitimate rally with some legs? Matter of fact. I don't know what your system is. You know what mine is. That's the back test of 618 from the lows. So that's a 61.8% retest from all the way to the top to the bottom. And then back up is 61.8% right now. So did the Dow already just top right now and it's going to do the same thing it did the last two times? Yeah, probably. It probably is. It's probably going to get rejected, rollover. But the momentum is there. There's a strong case that, hey, we're going higher. But it probably did already top. Probably just doing the same thing again. Getting ready to trick people. So You know, this is the line in the sand for me where I say, okay, you know what? I admit it. I was wrong. I was wrong. So, I mean, obviously, we saw the rally happening. We saw the move here. We look for the 200 retest. And again, this extra little leg up here since then, based on probably, you know, the inflation, CPI print, etc. Markets considering a pivot or a pause or something like that. It could have legs, could keep going. I mean, DXY weakness too, with the yields coming down. You would think, though, honestly, that foreign equities would be surging as they get the benefit of the relief rally in stocks plus also weakness in the dollar. So that's where you would see the real plays being, which is, you know, the argument that you would invest in something like, you know, foreign gold miners or I mean, just really foreign stocks in general. SPY not showing nearly the strength. Now, it did catch up here. Obviously, this was extremely weak, and then it shot up from basically 373, gapped up to 388, and then pushed up to 394. Not nearly as weak. Looking like it's ready to retest the 200s at about 400 or so, but, you know, we're not getting that bullish, let's go to new highs picture at all. I mean, this doesn't tell me the same thing at all. I mean, it looks okay. I almost said it looks okay, but I don't want to lie to you guys. I mean, it's a dead cat bounce off the 200s. It's a series of lower highs. It's not like melting down. It doesn't look like it's about to go to zero, but it doesn't look good. It doesn't look good. Again, though, bullish divergence here, and we did finally see some kind of move. Still very, very far away from an 821 cross, anything like that. I mean, just right now, the Dow Jones is just very, very strong. It's painting a completely different picture. Triple Qs, again, big day up yesterday. Big day up yesterday. I mean, the gap up from 267 and then close the day at 282. I mean, that's a big fucking deal for, you know, the NASDAQ, the Qs, tech. Big deal. Starting to build a little momentum. Still well off. Didn't even take out that previous high right here from the bounce. But, I mean, if it does, what is that? I mean, what do we expect to happen right here? Let's be real. I mean, let's just assume that this isn't just going to, like, immediately fail. I mean, which I think is a safe assumption based on what's going on here. You know, we can basically just look at a little something like this. A little W, double bottom. And then if we just look for, you know, what's the measure move going to be off of that potential double bottom. I mean, depending if you're going conservative or aggressive, we'll pick somewhere in the middle right here. And then, you know, see if that lines up with any confluence. You know, we got the 200s right there. So does it seem likely that this is where we're going to end up going? We break through the W. We get the measure move. The surge up on NASDAQ to 310 from 283. If we break through, we're at resistance right now. This is it. This is our line in the sand. You know, very clearly, obviously, we're watching this previous swing right here. So that's where we put the line. So if we break through that, that's also, you know, the neckline. That's our move up. That's a back test at 200s. And then, you know, just for simplicity's sake, we move it over here and we see how it's acting as, you know, a neckline. And then you really look at it and you say, oh, okay, wait a minute. This kind of reminds me of the thing we were talking about earlier. We have a clear swing low. We have a clear swing high. And we're looking for, which one do we take out first? Came down here, put in a higher low. Didn't take that one out. Come in here now. And now we're threatening. If we do take this one out, we get the measure move of the channel. What's the measure move of the channel? I wonder if it's going to be this thing right here. Oh, look. You know, arguably the channel is slightly more bullish. All these things are really the same. I mean, it's the same thing. All the ways that we're using to, you know, chart and do all this fun stuff. Support, resistance, a V bottom, a W bottom, you know, a measure move breakout of a channel compared to, you know, of the move itself. It's all the same stuff. It's just different ways to do the same things. So that's why when people are like, oh man, I don't use patterns, head and shoulders, W bottom, double bottom. Oh, that's just laughable. Those are, you know, have fun with your crayons. It's like, I mean, yeah, but what do you use then? It's like, oh, I only use moving averages and horizontals. Oh, the same fucking thing? It's just how you package it. That's why when people get real fancy with technical analysis and all that stuff, I'm like, yeah, but I mean, aren't you just like repackaging the same shit that everybody else is doing? Like, there's only so much data. So that's the way I look at it, you know. Don't overcomplicate something that's already complicated. IWM, the Russell, the Ruddy, again, been doing actually okay in comparison to the other major indices. I mean, not like the Dow Jones obviously surging, but still well off of the previous swing, but at the 200s. So much more bullish, obviously, than the Nasdaq or the S&P. But the Dow Jones right now is just showing off its daddy status. So what's going to happen next? Well, we have to see if we break through this. Obviously, we start looking at that previous swing right here. I mean, I'm not going to do it again because we're just doing the same thing over and over again. And then a lot of times, instead of just drawing a line right here, oh, look, it's a fib instead. But it's the same thing. It's all the same stuff. Confluence is what we're looking for. XLE, energy. So, maybe I'm going to be wrong about this. Can continue surging. We're coming down a little bit. We gap back up to hit it again. I'm pretty confident this is going lower. Now, could I be wrong? Sure. Definitely could be wrong. But it looks like this is getting ready for a pretty epic top. And, again, same exact thing. Dear God, we need to just erase all these charts. I mean, same exact thing, though. What are we looking for? Well, if we take this out, probably like going to just surge to the moon. And, if not, probably come down to this low. Well, that's the macro low. Right before that, we have this low. So maybe we come all the way back down to 70. The most important thing, though, take out the high or take out the low. Same thing over and over. XTN, back tested at 200s. Another in a series of lower highs and lower lows. Hearing a lot of weakness from big players in the transportation game. Okay. FedEx, UPS, Jason Statham talking about transportation as well. I'm not sure how that's relevant, but a lot of stuff going on in the transportation sector. So what does that mean? Well, obviously we know that is one of the four horsemen. On to semiconductors. Again, surge lately. I mean, just very, very powerful moves. These have been extremely weak for some time now. Obviously the second of the four horsemen as well. And what are we seeing with that? Well, descending, channel, whatever you want to call it, back testing 200s after putting in a lower low. I mean, just looks like it's going to keep doing the same thing until something changes, till it takes out this previous swing, till it takes out the 200s, which is why the Dow Jones is getting fucking exciting right now. Because it's like, oh, we missed a move. It's off the bottom by like 1,000% or 20 or whatever, somewhere in between those two numbers. Sure, okay. And you're like, well, we missed the bottom. What the hell? And it's like, okay. So if you bought the bottom recently, the recent bottom, maybe not the macro bottom, we don't know yet. If you bought that bottom, that's great. But you did it with tons of uncertainty, with a very high probability that, you would be wrong because we're in a downtrend. Once we flip into a bull trend, sure, you didn't get as good a price, but you get to buy into what arguably could be the beginning of a macro uptrend that goes on for, 2 years, 3 years, 5 years, 10 years, 20 years, who knows? So you buy with a lot more confidence at a slightly higher price. I'll take that deal any day of the week. If you tell me we're going to flip a coin and it's a 50-50 chance if I bet now, but if once the coin's in the air, you'll give me another, 25% chance, and now it's 75% chance I win, 25% chance I'm wrong if I wait to call it till it's in the air, am I going to do that? Of course. And you're like, there's one catch though. And I'm like, what's the catch? And it's like, instead of betting a dollar against each other, like a normal coin flip, winner takes the dollar, you're going to put up $2 and I'm only going to put up $1. Well, sure. We'll just do the math on that. And we say, okay, if we win 3 out of 4 coin flips and we win $1 every time or we lose $2 every time, we do the math and see if it works. I mean, that's what we're doing. That's what we're doing for trading. It's still a coin flip, really. Does it go up? Does it go down? Do we play options and then it goes sideways and you lose either way? I mean, that's all it really is. So it's simple math when it comes down to it. And you're like, oh, okay, well, let's do the calculations real quick. Well, the risk reward, just see if it's positive or not. And then see what's the probability of success. Well, are we trading with the trend? No. Well, probability is probably less than 50%. We're going down. Bear market on semiconductors. So even though we're having an aggressive move to the upside, the likelihood of successfully trading to the upside is less than successfully trading to the downside. So same way on Ethereum, I said, when we get to the 200s, I'm going to enter a short on Ethereum. Same exact thing. Semiconductors. When they get up to the 200s, there's going to be a bunch of people out there, a bunch of market makers, whales, investors, traders that say, okay, you know what? I'm going to short the 200 moving averages. So we'll see what happens when we get there. But that's the psychology of the market. And then once we get rejected again at a lower high, then we just go to a new low. So we just continue the downtrend until we don't. And you're like, well, when do we not do it anymore? I'll tell you when it happens. No one knows. XLU has reclaimed that little surge up yesterday, has reclaimed the channel. That is a big deal, obviously. The breakdown from the channel, while disconcerting at times, we talked about was either going to be a potential amazing buying opportunity or just a step down before a continuation. Now, obviously, no one's getting rich on XLU because it does like massive moves. And you're like, oh my God, what was that? 80%? And you're like, look at it. And it's like 2.3% move. And you're like, oh my God, why am I even looking at this? Obviously because safety stock. XLP consumer staples, back tested at 200s. We just confirmed basically into a bear market if we don't go higher here. This is it. This is the back test. The market said, okay, we just went to a new lowest low. We're going to back test the 200s. Reversion of the mean, the final bullish trade before we enter a bear market. Could we reclaim this level? Could we take out this high and then surge and continue to the upside? It is definitely a possibility. Definitely a possibility. And again, same thing. We have clear resistance up here. That's what we're paying attention to. We have clear support down here. That's what we're paying attention to. Maybe it's a fib. Maybe it's a moving average. Maybe it's just, a previous swing. It's, essentially all similar to the same. Descending channel right here. Consistently putting in lower lows and lower highs. So if we do get out of that channel, if we do take out the 200s, if we do take out the previous swing, again, that's when you can get really, really bullish with a lot of conviction. Right now, it's like, yeah, we can buy support, counter trend, and expect potential nice bounces, dead cat bounces, etc. But the truth is we do it with lower, much, much lower conviction. All right, so we made it through a couple of them. We got some requests today. We're going to do crypto. We're going to do some commodities, talk about the relationship between weakness in the dollar and commodities as well, and how we could see a potential trend shift where commodities go higher. Energy goes higher, risk on assets go higher, crypto, stocks, whatever. And DXY continues to be weak. TMX continues to be weak. Foreign, equities, markets surge. There's definitely a world where that happens. But how do we get there? Because what I see so far is we had a very aggressive move down in the dollar back to support, the one we've been expecting. And that has resulted in, a very powerful move in quite a few of these markets. But we got to be real careful getting on the wrong side of a dead cat bounce, thinking it's a change in trend. Right now, the Dow is where you really got to be careful because it's the one that's potentially giving a big false signal or it's, leading the entire market out of the bear trap. What's up, J-Hoff? Good to see you. Sohail says, hey, some people talk about Q1 and Q2 of 2023 will be the big crash. Then again, everyone have an opinion. Hope all is well. Crypto Trend Trader fan. Hope all is well as you with you as well, my buddy. Yeah, it's possible, man. There's theories about everything. There's theories about Bigfoot. It doesn't make them true or not. Not discrediting either side of it. A lot of the moves we're seeing right now in the market is based on, potential slowing, pivot, whatever, or realistically, what's it really based on? It's all predicated on one thing, the argument that inflation has topped, which so far the data says, it has potentially topped, and that's important. It's not just people speculating. The Fed has been very clear. They said what we need to see is inflation come down for a sustained period back to the 2% target. Now it's still well above that, but arguably they have data points now that say, okay, it's coming down. So they made it clear they want to see more data points. But, if there's 10 steps to this program to get us back on track, maybe that was step one. And, step two might be the Fed only doing 50 basis points at the next meeting. And then step three is maybe, they pause and don't do any basis points. Or maybe, and then they could come back and still do 50, but the pause is another step in the right direction. They're waiting. They're liking what they're seeing. Now, is that going to happen? I don't know. We'll have to wait and see, obviously. But, that's the argument, is that we're starting to price in a different potential outcome. Now, will that outcome be completely wrong? We'll have to see. Gold. So gold finally got the move we've been talking about. Hit the 200 exponential. We know obviously the 200 simple and that previous swing right here is what we're really paying attention to. So looking for gold at 1800. Nice move off the bottom here. And again, you know, if we just kind of zoom out and pay attention to what's going on, obviously we have some macro fibs on here. But if we just ignore those and we say, okay, that's our swing low right there that we're watching. This was our previous swing high that we were watching. And we know if we take out this swing high right here, we're watching this swing high. And we know that this is our macro target for what we're really looking at. So I'm going to get this one off here just to clean it up. So, you know, we broke through resistance. We got the move back to the upside. We're back testing the next level right there in the 200 exponential. Our target is obviously the 200 simple and everything right here. We've been talking about it. I thought we had a box on here. I think sometimes the box gremlins come into my charts at night when I'm sleeping and delete some of my stuff. Little chart gremlins. TradingView does it just to fuck with me. They're like, you prick, we watch every stream. Don't you ever talk bad about our awesomeness. So I mean, that's what we're looking for, about 1800. Now we start taking out that level, start breaking above the 200s. I mean, again, things start looking pretty damn good. It's like, oh, gold bear market, psych, maybe. I don't know. Still looks pretty bad on longer time frames. Silver, same thing. Not seeing that same strength today. Kind of got ahead of the gold rush there. Obviously hit our target. We have this channel if we extended it out, you know, which is basically where that top resistance is. So now it's going to be all messed up, I'm sure, because I can't draw it straight across there, but something like that. So decent move. Obviously this is our measure move. So we're almost our target, like 22.50 or something like that, we said. I mean, we're pretty much, what, 22 we made it to? Yeah, so about 50 cents left. I mean, plus the little pullback, so maybe another buck to the upside. We'll have to wait and see, but, I mean, back on top of 200s, potentially. So, okay, let's be real, okay? So what happened? A bunch of these assets, risk-on assets, were beat down. They were getting beat down. They were getting tag teamed, okay, like a pro wrestling match, by the dollar and rates, DXY and TNX. We're tag teaming them. The bond market, the stock market, cryptos, they were just getting their asses beat, okay? It was like the Royal Rumble and DXY and TNX teamed up. Everybody else was like YOLO solo, and they just started like whatever they do. Clotheslining people, double clipping them, jumping from the top ropes, you know, wrapping the barbed wire around them on the Royal Rumble. Obviously, I'm not a wrestling fan, so sorry if my terminology is a little bit off. So now, all of a sudden, DXY and TNX are kind of getting their asses whooped. So everything's surging. The problem is a lot of these things that have surged recently have all surged back up to key resistances. So as the DXY hits the 200s, so DXY has moved to support, all these risk on assets have moved to resistance. So is it more likely than not that we at least see a reflex rally back in the opposite direction? That seems very likely to me. And then we'll see what happens. Do we put in a lower low? Do we start violating key levels? Do we hold a higher low and then potentially can continue to the upside? That's what we have to look out for. You know, is DXY put in a lower high and then go lower? It's definitely a possibility. But at some point in time, it will bounce back up to put in that lower high or arguably a higher high. So GSG, when we look at commodities, this is heavily balanced to energy as well. And all it does is just tracks the GSCI index. You know, still in between the 200s, 200 exponential and 200 simple. Still just chopping around sideways in this range. Now, arguably, sure, we broke down out of the bottom of that range. We had a little something going on here that doesn't appear to be that useful. But what if we actually just shift the way we were looking at things a little bit? And that this way we don't have to like just draw a whole new tool in there. What if we look at it more like this? And we say, hey, look, we're just going sideways. And then like we had this little breakout to the downside, this little breakdown. We did. But we reclaimed it. So, you know, this right here, this little spring or this little failed breakdown or a gap down, you know, retest and then, you know, reclaim that area. Maybe that was just an anomaly. So we just look for that. We'll just assume we're just going to keep trading sideways inside this pattern. And then when we break out of this, when we take out that high, then we can say, okay, we're probably going to new highs. Let's go ahead and jump the gun. We'll get a long back to the top. Maybe we'll take some take some profits here in case we get rejected, but possibly get the blue sky or, you know, break to the upside. Same thing if we come down here to the downside. If we break down from here, we'll be like, oh, hang on, we just lost the channel. We lost the 200s. But this is what we're really looking for. If we take out that little swing, then it says, okay, likely we're going all the way down here to the target. So again, we don't know which one's going to happen right now. We could trade the range that we're in right now. We could trade the range from the macro swing high and the macro swing low. Or we can just kind of sit and wait for more data. So LNG, so playing out exactly like we said, we're able to clearly identify multiple drives of bearish divergence, triple bearish divergence. Obviously, you guys know I predicted that we would very, very quickly be down 25%, roughly down to that 149 level. Arguably the 200 exponential and simple closer to like 145. It's happening in real time. So congratulations. You saw a miracle. We were like, oh, is it going to go up or go down? Oh, everything points to the downside. Oh, look, now it's going down. Oh my gosh, that's so crazy. I mean, the market laid out clear breadcrumbs for us. And it said, hey, look, all you have to do is spend a tiny bit of time, look at this chart, and look for the clear signs from the market that this uptrend was unsustainable, at least short term. This ascending broadening wedge was actually probably some form of distribution pattern, and that we're likely to come back down to the bottom of the range. And then now it's happening in real time. So congratulations, we solved the mystery. MOS. Mosaic, again, just doing the same thing. This kind of stuck in this little like commodity situation here. Now we're seeing with like the metals and a lot of other commodities, they're surging because of the dollar weakness. We're not seeing that the same way in some of these like, fertilizer proxies, uranium, etc. You would expect, this is URNM now, Sprott Uranium ETF. You would expect now with everything surging and energy moving back to the upside and things starting to look good, uranium would be reclaiming these levels and starting to threaten some of these previous highs. Now that may be about to happen short term. That may be about to happen, but it's not currently. So we had talked about the potential for this little topping pattern, and now actually we've just kind of gone sideways here. So it looks a lot less likely to happen just because we've went sideways long enough that, the symmetry isn't there anymore. So maybe we're going to come back up here to the top of the range around like 79. Test that. Another like 10% up in URNM. We'll have to wait and see. But then, then we're just at this descending resistance back at the top of the range. We're on top of the 200s, so maybe we are setting up for some strength. But definitely the most mixed signals I think we're getting in the market right now. Definitely the most that we've had recently. I honestly think that. CCJ, I think there's a lot of people that are very, very confident the market is bottom, and there's a lot of people that are very, very confident that the markets will go much lower. There's a lot of people that are very, very confident that the economy globally is total shit and gonna just get crushed. And there's a lot of people out there that are like, hey, actually things aren't that bad. And there's an argument based on some data that that's actually the case. So I mean, we'll have to wait and see. The big issue I have with the argument that things aren't as bad as people think or whatever, because of the inflation, and we use year-over-year data, it really throws off numbers. Now, if you adjust those numbers for inflation, which we're not going to see earnings adjusted for inflation or something like that. Like for instance, if I have a company and we sell 100 widgets for $1 each, and we make 50 cents on each one of those widgets, okay? And then suddenly we get hit with inflation, and after 2 years of, 6 to 10% inflation, whatever you want to call it, let's just for simplicity's sake, say 10% inflation. If there's 10% inflation, and previously, 100 widgets, I was making 50 cents a piece on the widgets, so I was making $50. That was my earnings. And now suddenly, we see 10% inflation, so I have to raise the prices on my widgets. Let's say I don't mess with any, profit margins, anything like that. I literally just raise to keep up. So now suddenly, my 100 widgets sell for $110 because I have to charge, $1.10 for each widget now. But I'm still only going to make the same percentage on it. I'm not taxing the consumer, which is not what took place. We know that in a lot of cases, and there's an argument for it. It's like, yeah, it's for shareholders. Of course we made money. Congratulations. We did our job. Fuck you. But also, it's like, well, you're kind of like war profiteering, aka like war on Rona, war on, energy, war on Ukraine, all those things. So argument to be made for either side. Let's put that aside and just say though, now when we look at my numbers at the end of the year and you look at my sales and you're like, oh, what were your sales last year? $100. You're like, oh, what were your sales this year? $110. And it's like, wow, congratulations, you grew 10%. So let me extrapolate that year over year and see what your company is worth now going into the future with a 10% growth rate. And that's with nothing else changing. I didn't sell any extra widgets. I didn't make any extra money. It's literally just the inflation makes it look like I'm doing better. So if you adjust that for inflation and say, okay, well, there's 10% inflation, blah, 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 go do the math. And you're like, oh, we didn't grow at all. We still just sold 100 widgets. And then a million other factors can go in there too. Maybe we raised our prices above our costs. Maybe, you know, et cetera, et cetera, et cetera. So a lot of the numbers that we're getting are very, very skewed. And the truth is, the reason we have all these things, GDP and, you know, all the earnings and, you know, sales and PE ratios and all this stuff is to just try to figure out what this company is worth, what this asset is worth, what this share is worth going into the future based on the only stuff we have, which is the data from the past. So we're just trying to figure out what the future value of this investment is to figure out if it's good, bad, or ugly. So that's all it really is. So the truth is, if we're getting bad data, we're pricing things wrong. The market is not being efficient. So going into the future, sure, if we don't price anything based on inflation and we have sustained inflation over time, it's going to look like every business that's still operating is just crushing it. Look at this growth. It's absolutely amazing. You know, 10%, 20%, 50%. And you're like, well, that's just the inflation rate. That's not really growth. So the truth is, the real measure is not GDP. It's not, you know, earnings and profits and all. No, the real fucking measure is productivity. Okay? That's the real measure. If you want to figure out really if the economy is in good shape, figure out, is the economy making more or less stuff? Is it providing more or less goods or services? That's what it's all about. Okay? And the reason energy is so important to that productivity is because, hey, you know, humans are great and they have, you know, good existences on planet Earth if they live, you know, under a bush and hunt and gather to stay alive. That's great. Congratulations, humans. You're better than, you know, most of the other animals on planet Earth. What if they have fire? They're even better than that. What if they have electricity? They're even better than that. What if they have diesel engines? They're even better than that. What if they have, you know, as we add all these layers on top of it, you know, quality of life and productivity go up. So when we start taking away energy and food, well, now we don't have as, you know, many awesome machines or the ability to do extra productivity stuff. So our productivity goes down because now we don't have those diesel trucks because we don't have the energy to drive the tractor. And because of that, now we don't have as much food. So we don't have as much food to give to other people, you know, who were relying on us to give them food because we're a farmer and that's what we do. So instead, there's less food. So now some of those people can't go do what they were going to do. And then they have to go figure out how they're going to get food or make food or, you know, hunt or fish or whatever. So, you know, on a broad scale, the more energy we lose, the more food we lose, the more productivity we lose, the worse off the human race is. And that's what we're trying to measure, really. Hey, when we look at the world GDP, we're saying, is the world getting better or worse? Is it growing or shrinking? Is it, you know, inflating or stagnating? Like, I mean, that's what it really comes down to. So we could look at all these numbers and everything like that, and we can get whatever picture we want. We can use the statistics to paint a beautiful picture of why the world's not so bad right now and the economy's great, or why just everything's shitty and it's all just going to collapse. We could paint whatever picture we want with the same data. That's fine. That's the beauty of statistics. You can always make it say what you want. But the truth is, really think about it. Are we more or less productive than we were 1 year or 2 year or whatever? When we take into account population growth or declining population growth, when we take into account less energy, less food, less productivity just in general, less efficient supply chains, because instead of, you know, this amazing globalization that's been going on for 30, 50, 100 years, this, you know, efficiency of supply chains globally, now suddenly everybody's got to make all their own PPE and their own, you know, vaccines and their own cars and their own energy and all. So, I mean, does that make the world itself more or less? So, I mean, that's the rant for today. You got it. You're done. Happy Friday. I mean, more or less. Are we more or less productive as the human race? I would say less. So for me, the outlook short to midterm, not good, because it's going to be very difficult for us to get back to even those same levels of productivity, let alone to continue the growth that was only really just kind of chugging along because of the 2% inflation mandate. And now, even with all that extra inflation, we have 2 quarters of negative GDP and then one little itty bitty little positive quarter of GDP, which, you know what? I know I said the rant was over, but I want to talk about something really quick, okay? USA had their last quarter, Q3, positive GDP. Why did they have positive GDP? I'm not going to go into the whole big thing, but it's net exports, okay? We exported more dollars worth of stuff than we imported. And you're like, that's crazy. That's not possible. All the U.S. does is like consume stuff. Well, what's our biggest export, okay? Military equipment and energy. So energy prices are at highs. We're exporting a ton of energy to help out Europe. We're exporting a bunch of weapons. So there you have it. So energy and weapons. So as long as we keep exporting a ton of energy and exporting a bunch of, weapons of war around the world, sure, GDP is probably not going to look that bad. So if we have 8% inflation and 2% positive GDP 1 quarter out of 3, I mean, how's that going to look in the future? Is that GDP growth? Is that economic surging? No. All right, so CCJ still trying to fight to hang on to this bull trend. Tilray, we're seeing the pot stocks up here. Got to be real fucking careful here on this Tilray. A couple group members were chiming in saying they were taking profits on this. I think you're picking the right area right here. We don't want to get greedy, obviously. Obviously, it's not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research, trade responsibly. But I mean, if ever there was a clear resistance, it's right around here. We had talked about a slightly higher target to upside at like 444. I don't know if we get there. We don't want to be too greedy. I think probably the responsible thing to do is at least take some off the table here. Potentially leave some in the game. Potentially just close the whole position. Whatever. It doesn't matter. It's been a nice move, obviously. Congratulations, everybody who took on that. Obviously, we have macro massive targets on Tilray to the upside. Some of these targets are in the trillions of percent. Or wait, hang on. No, that's not right. Hundreds. Sorry, the big numbers. They confuse me. We just use the trillion and the billion and the million and the... It's like an interchangeable now. When I want it to sound big, I just say trillion. But 289%. Still a lot, not quite a trillion%. So, what is that really, though? Just a lower high after getting murdered for years? Not that crazy to think we retrace 50% eventually. Now, what's the difference, though? You're like, well, you just told me it's a good time to take profits. Well, we buy a key area. We take profits at resistance. We can enter back with more confidence if we break through this resistance, if we break through the 200s, and then capitalize on this move. Sure, maybe we get chopped up for a couple percent. But how many people along the way down you think wish they would have took profits? And matter of fact, we talked about this, okay? I don't have exact data for you right now, but obviously you guys know if you've been following for any amount of time, we took a position on Tilray at 567, and then we sold into this pump at like 830. That was like 50% up on that trade. Just closed the majority of the position. Beautiful. Well done. Kept a little bit open. We call that like some dust after a trade or whatever. You don't close the whole thing. Maybe keep 10% of the profits still in that asset. Start to build a position over time, whatever. Well, from when we entered that position till it was like maybe 2 weeks ago or something I checked, that was down 45%. Now, it didn't look like that in like the actual thing because we took other trades in the meantime. But it was like crazy to think about that. You're like, wow, if we wouldn't have took profits right there, that entry would be down 50%. Now, it's not as bad now. Obviously, we moved back to the upside some. But just for perspective, we could have went the difference of being up 50% where we closed our position to that same exact position and just time working against us in a downtrend to being down 50%. So you're talking about basically 100% swing in the position. That's a big deal. And that's why, when we come up to resistance, we lock in gains. And then gladly I will miss out on this move right here at resistance, around resistance, to the 200s or whatever. Gladly miss out on that 12%, and I'll just get back in here at $5. Once we're above resistance, once there's actually a reason, to say, hey, we might actually be turning around this trend. Because the truth is, this trend on Tilray, let's turn off our drawing tools. This trend on Tilray, arguably was starting right around here. But the 200 simple lagged really far behind it. So let's just go from there. So from when this actually confirmed into a bear market, all right, and we're not padding the numbers. I'm not putting it up here at the moving average and going from there. I'm going from where the price action was when it happened. From when that happened to the bottom was 77%. From when that happened to where we're at right now was 65%. So if you literally just say, oh, I don't like all the fancy stuff. I'm not a trader. I'm an investor. And you're like, that's your cop out for why you can just be fucking lazy. Okay, fine. Be lazy. I don't care. Do it then. But if you can't look at a chart and say, okay, let me put nothing else on the whole chart. Let me put one indicator on the chart. Arguably, the greatest indicator ever created by man. Arguably, okay? And, you know, that's, well, I was going to say that's not just my opinion, but actually that is just my opinion. So there's no actual proof or statistics backing this up. But, you know, I have at least one person that could say this is the greatest indicator ever created. So why not just use this? Why not just say, oh, look, indicator turned blue, me buy. Okay. Indicator turned red, me sell. Oh, look, 70% down. We missed out on. It was one trade. You sold one time right here. And you're like, well, I don't know. I don't like selling because then I don't know where to buy at. I don't know where to buy at. It's too hard. Well, you just look at the same one indicator. And then when these turn blue again, you buy. Red and pink, sell. Blue and blue, buy. Oh, ugh, like trading. It's easy. It's not that damn hard. I don't know. I don't get it. People are just lazy. Or they can't stick to their guns. That's fine. Maybe you know yourself better than I do. But for me, it's easy. We'll just do the easy thing. When we get back above 200 exponential and simple at $5, we'll take a shot. Maybe something like this happens. We get above the 200s and then it fails and we go lower. Okay. We'll get back out and we'll try it again later. That's it. Don't overcomplicate it. And don't use cop-outs like, oh, I don't know when to get out. I don't know when to get in. Figure it out. Oh, educate yourself. I mean, you guys are. You're here. But tell everybody else. Let the rest of the masses know. So Alibaba. So China's still looking pretty rough here. I mean, obviously, nice little bounce off here. But it's like when you go down from, you know, $100 to $1 and then you go up 100%. It's like, oh, so you're back to even. No. You went down $99 and then you went from $1 to $2. Congratulations. You're still down 98%. That's how I look at China right now. That's how I look at FTX and these cryptos and everything. Just be real careful. Real careful. Honestly, the weakness in the dollar should really be helping out. I mean, obviously, these aren't in the DXY basket, but I mean, it should really be helping out, like foreign investment in general. NEO, if we break through the 0.5, likely get a back test at a 382. This thing could have legs too. I mean, we got basically to our downside target. This wick took us almost exactly to the target we predicted like a year and a half ago. 55% upside just for a back test of the 200s. Now, it's already had a pretty aggressive move, and it's up quite a bit today. So do you want to jump in after 12% moves to the upside? No, but I mean, there's 50% potentially still in the cards. I mean, the truth is this trade should have been put on yesterday. But, you know, it is what it is. But there's still something there. UTZ. Okay, so this was the old setup. So this was not a new setup. This was the potential from back here for the first target, second target, third target. So right now, obviously we took profits on this a while ago. That was done a while ago. And full disclosure, when I say we, I mean like group members and people that participated. I did not have a position in this. I mean, we just got to watch now for the swing. Right now, it's trading like clockwork. I mean, we see it's jumping off the fibs, you know, clearly reacting to the fibs, clearly reacting to the fibs, clearly reacting to the fibs. Well, you know, the yellow one, this is the bottom, obviously. So, so what's about to happen right here? I mean, realistically, we either head back to 0.5 and threaten that previous high, or we come back down here to the 236 in yellow and try to hold. And we're right smack in the middle. So this could go either way right now. I don't know what's going to happen, but, you know, it's looking a lot like a lower high if this stops right now, if this rejection continues. So if we break down below like 16, maybe like 80, you know, I would just assume we're coming back down here to like that $15 range. So I wouldn't want to be in it. But the truth is right now, we have to just do the same thing that we always do, which is we have a swing low right here. We have a swing high right here. So we're just looking for those. And, you know, without getting too crazy and drawing a bunch of extra lines, we'll just look at our fibs because clearly this is trading off the fibs. So the 236 fib, you know, is at 15 bucks. The 0.5 fib is at 19 bucks. And we are basically at 17. So we're right smack in the middle. So, you know, at this point in time, coin toss. Coin toss. Clear areas we're looking for, but there's no real new info here. Now, we talked about this a while ago. We did confirm potentially, you know, bear market here, bull market here, come all the way back down, we'll put in a higher low. This chart still looks bullish to me. I mean, as long as we're holding a higher low, as long as we're above the 200s and they're blue, this chart looks bullish to me. If you tell me right now, hey, what's going to happen next? You know, will you just sketch out like the future of UTS on this chart and just show me what my gains are going to look like, bro? Show us about them gains. I would say probably, let's say it does top out here temporarily, comes back down here, but we have another higher low. Come back up here, chop around a little bit, throw around here, come back down, retest, finally get up here, and then boom, nice little parabolic move there, chop around, you know, and then that's to our next target. That seems like a pretty reliable, pretty, you know, likely path. I don't want to say reliable, but pretty likely path that it could take. And it's predicated on some basic principles. You know, we don't take out the previous low. It would look even better if we hold some kind of ascending support like that. You know, arguably, yeah, maybe we don't even want that. Maybe we just want something like this. Maybe this will give us a, you know, more accurate idea of what's going to happen. Maybe we want something like this. You know, we just basically, we have a low, and then we have a higher low, and then we have a high. We only have one data point on top, but it's still developing. We have our heart line here through the middle. Don't see much going on here. But here, we're kind of hitting that heart line and topping. So maybe we do come back down. Oh, look, it lines up perfectly. This weird channel lines up perfectly with the hypothetical drawing that we just did on the spot. That's so crazy. It's almost like markets just do the same shit over and over again. So that's what I would be looking for. A back test of 236, then a burst through the 382, then a move to the 0.5. Then a back test of the 382, then a burst through, you know, the 0.5, and then a move up to arguably the 618 or green 236. That's what I'd be looking for. And maybe that takes us around to the top of the channel. And then when we look at this, it's like, well, is this bearish or bullish? Well, what could happen if this is, if I actually knew what tool I was looking for. No, that's not the one I want. Depending on, you know, bear case scenario would be we come all the way down here, we get a reflex rally back up to something like this, and then we go on to put in new lows. And that this actually, you know, was just a failed attempt to flip into a bull market, and then we just roll over to new lows, and this thing ends up at 10 bucks. That is definitely a possibility. Definitely a possibility. There's also a possibility that actually what already happened was, you know, something along the lines of this, roughly, some kind of retracement, you know, and that is completed now, and now that actually we're getting ready to go into a bull market. So we're looking at something like this, you know, 1, 2, 3, you know, 4, and then 5, we retest the highs. Oh, God, no. What did I just do? Oh, no. Oh, no. I did it, guys. I clicked on something, and I don't know what it was, and now it'll never be the same. So that's it for the stream. All right. Everybody have a great day. I'm out of here. I like, honest to God, do not know what I hit. We're screwed. Awesome. Oh, we did it. We figured it out. We hacked TradingView. Holy God. All right, so that's it. We're done with that. We're never looking at that chart again. I hope you got what you needed. All right, so IoT. Keep in mind, too, with these requests, guys, or even if not a request, I have no idea what a lot of these things are, nor do I have any bias one way or the other. I'm just going off the chart. I'm not saying you should buy them, you should sell them. They're good, they're bad, they're ugly. I'm just looking at the chart and telling you if it's good, bad, or ugly. So we just recently put in, now first off, first thing to pay attention to, okay, there's zero history on this chart. December of 2021, December 15th, 2021. So we have zero history. I have nut hairs that are older than this chart. I mean, I think we all do. I mean, well, not everybody, because you have to, can't have the hair on the, if you don't have the, you get. I mean, so we got a pretty clear descending channel. We get a pretty, I mean, this is literally what we were just talking about, potential scenario. So you're like, oh my gosh, you just looked at the chart ahead of time. And then you're just like, oh, look, I planned this whole elaborate thing where stuff, and then it reinforces the thing I said before. No, come on, guys. I don't plan anything. Seriously. Someone requests these charts ahead of time. Actually, the same person requests these 2 charts ahead of time. So maybe they were getting at something. But the truth is, what do we have? A descending channel. We break out of the channel, get a reflex rally to the upside, and then resumption of the downtrend. So what's likely to happen? I mean, we're likely going to just keep going down. Been going down, right? And then you're like, well, what if we like full on inception it to like the next level? You know, then you just say, well, we just go from peak to peak, and then that's like resistance for when the next breakout happens. And then until something changes, we just keep doing the same thing. And then obviously the moving averages line up in the same spot too. So very clear what's going on here. This was our low at 890, and we took out that low. So it's not good, obviously, taking out the previous lowest low ever. Definitely not a good sign. So the same way we look for, you know, blue sky breakout, the highest high a chart has ever put on, and there's zero resistance. So, you know, blue skies, as in just straight to the moon. Same way we look at new lows. You know, once you put in a new low, it's like, wow, I mean, sure, maybe we're not at the lowest low ever right now, but all we've been doing is just putting in the lowest lows forever. And then for a little bit we didn't. And then we went on to just continue putting in the lowest lows ever. So it seems likely to me that we're going to go on to put on more of the lowest lows ever. Now, what could happen here? You know, again, your bull case without, you know, being bull-tarded would be something like this. So the initial pop back up to like $13 is what you look for. Now it's like 30% from where we're at right now, about $10. So, you know, that's pretty good. How do we get there, though? Well, you got to look at this. We're at the heart line now, so you're buying into resistance if you bought right now. Then we have about 13% up to the top of the channel, which again would be resistance. And then from there, we get to that 30%, which again would be the 200s, the descending resistance as well. So some clear resistance. And then after that, you know, likely just come back down, retest the bottom of the zone, maybe put in new lows, 35% down. So it looks like you got about 30% potentially to the upside, 35% to the downside. Well, what if you're just wrong right away? What if you're bullish and then it just goes straight down? You're talking about 15%. And what if you're bearish and it just goes straight up? Well, we know that's 30%. So if it's 30% versus 15%, you know, obviously we can do it the simple way, but you know, we just look at it and it's 2-to-1 risk reward ratio, basically. You know, so for 2-to-1 risk reward ratio on a trade setup that's counter trend, because we're clearly going down. We're clearly in a bear market. So any trend to the upside, or I'm sorry, any trade to the upside is counter trend trade. So the truth is, you know, 2-to-1 risk reward ratio on this trade, 30% upside, 15% downside, but it's counter trend. We know with counter trend trade, we need at least 3-to-1 risk reward ratio. So there's nothing here. There's nothing here. Because the probability of success coupled with the risk reward, like full circle back to the beginning of this technical analysis / video / live stream. You know, when we calculate it out, we do the math, it's not worth it. It's not worth it. So we have no edge. It's not worth it. Bye, Felicia. So I don't see anything here. There's definitely an argument for a 30% move to the upside. But again, without proper risk reward, there's no real trade there. Not for me anyway. I mean, not that I was planning on trading that anyway. But so I didn't actually lose anything. Matter of fact, I gained. I saw one more asset on planet Earth that I don't want. Congratulations. We did it. We found another asset that looks like shit. So, speaking of assets that look like shit. Nice segue. I like it. Oh, let's take a look at Bitcoin and the cryptos. I know you guys are excited. I know you've been waiting. I'm going to jump in the chat real quick and then we'll get rolling. Big D says, hey all, what's up, Big D? Toby R. Talk says, great stuff. Crypto Trend Trader, please check PBR stock. My man says, Big D, I hope everything is good with you. Can you please explain what does a big difference between Bitcoin spot and futures mean? 600 point as of now. Shouldn't these line up closer? Thank you. Yeah, they should line up closer. There's definitely going to be, we saw it when there was like big volatility with FTX. Part of the problem right now is inefficient markets. So without getting like crazy into the details and saying stuff that I don't personally know for sure or haven't validated, essentially what it comes down to is Sam Bankman-Fried got famous back in the day for essentially arbitraging markets. So what he was doing was there was a big premium for like Asian markets in the last bull run in particular. Last, I mean like the one before the one that just ended. Like 2017 peak one. So essentially what he was doing was buying Bitcoin, in the United States and then, mailing it to Asia. So obviously because it's digital, you don't actually have to mail it. So you're able to arbitrage the difference, for basically free. So realistically, what was he doing? He was basically buying Bitcoin on one exchange and then selling the Bitcoin on another exchange. And oftentimes, if you're bankrolled, you can have the Bitcoin already waiting on those exchanges. So you can arb the difference in real time without even having to transfer. So if you have, 10 Bitcoin on an Asian exchange and then you have the money somewhere else in a US exchange, let's say, for instance, you can literally in real time sell and buy Bitcoin at the exact same time. You sell the Bitcoin you have for Asian prices and then you buy the Bitcoin for US prices. So he was arbing the difference. He was taking advantage of inefficient markets. So part of what he built up in his business or empire or whatever was essentially liquidity provider between those exchanges to bring the spreads down so that people aren't able to do what he was doing. So essentially they just think about it like instead of one guy sitting there saying, hey, I'm going to sell my Bitcoin on this Asian exchange and I'm going to buy Bitcoin on this American exchange and arb the difference. Just think about programs doing this, and liquidity providers doing this, essentially closing the gap. So if there's ever enough of a gap, whether it's 0.25% or 0.5% or 1%, that it makes it worth the liquidity provider, someone else basically trying to arb that, the liquidity provider closes the gap enough to where it's not worth it. Makes the markets more efficient, which is why you could see like a bunch of different exchanges all at the same time have the same price. So when you remove that, essentially like our bot or liquidity provider or whatever, however you want to term it, when you take that back out of the market, you go back to those inefficient markets again. And essentially part of what, Sam was doing was arbing that, and he was kind of responsible for helping to make the markets more efficient. So now with everything going on, we're seeing now inefficiencies in the market happen again. And I don't know what the exact reason is. It's not like he's just woke up and was like, well, I guess I'll just shut off all these bots now. I mean, it could be regulatory. It could be, there's literally stuff closing down and they can't pay the power bill. I don't know the details of it, but it's something along those lines, essentially. So all we're seeing is, futures and spot markets, the same thing is happening as well. There's going to be people out there that are going to be arbing the difference between those two. And sometimes we see short-term gaps, but very, very rarely do we see longer term differences because there's somebody out there that's just going to say, hey, look, I can just do this and make free money. And then that closes the gaps on the market. So during extreme volatility, which I would argue that, one of the biggest exchanges worldwide imploding is extreme volatility, it's not unrealistic to think that we would continue to see crazy random spreads on different cryptos, different exchanges, futures versus spot, etc. So there's your long-winded explanation of a simple answer. And then Yoshi says, hey, Crypto Trend Trader, can you take a look at altcoin CVC if you have a chance? Yeah, we're about to do some cryptos right now. So what was it you asked for? PBR and CVC? Yeah. All right. PBR, Petroelo, Brasileiro. I mean, that's like Brazilian oil. Is that what's going on here? On New York Stock Exchange? I'll assume that's the one you want. Oh, could be Pabst Blue Ribbon though. Maybe you're interested in the subpar beer, Pabst Blue Ribbon. That could be it. Maybe you're telling me I should get a cold drink, and that you actually don't want to see a ticker. Let me know for sure though. I'm not. I'm confused now. And what was the other one? It was PBR and CVC. So we're talking about CVC crypto. I'm assuming, not the Australian. Yeah, always like if you could just let me know in the future just a tiny bit more details, guys. It really helps out. I'm going to assume that we're talking about a random crypto. Oh my god. I've never seen anything like this in my life. Okay, so all right, let's start with Bitcoin and then we'll work our way over there. So Biddy on the daily. So okay, we saw a pretty aggressive move down, pretty disgusting. Saw a reflex rally back to the upside. And you're like, no, it's not a reflex rally. The bottom's in, blah, blah, blah. Sure, maybe it is. Sure, you're right. Realistically, it was about 20% off the bottom, 16%, not quite. Definitely tradable bounce, obviously. You guys know we were short ETH, took some longs on some random cryptos, and exited back out of those positions. We were trying to take another long, but we'll see what happens here. There's still some potential for further upside. I just want to talk about essentially what we were talking about yesterday on stream. So we have basically this setup right now. They could go either way. So this is what we talked about. A 1, a 2, a 3, and then a 4, which would be a retest of the 1, and then continuation of upside. I don't remember. What did we do? Delete it? I swear there are gremlins. It could be on my other one. Maybe it was in the group, and I didn't talk about it in the live stream. Okay, that might have been it, actually. So yeah, what we're looking at now is the potential for this. A slightly higher push up here to one of these other resistances, slightly higher high, back test at 200. Does it have to happen? No, of course not. But what we're looking at is, sure, we did come down here and put this deep wick in, but until we close, depending on what time frame we're looking at, maybe it's an hour, maybe it's a 4 hour, etc. Until we close below roughly 16,700, there's still potential for this to continue to the upside. If it closes below 16.7, we would have closed below the 1. And, it's no longer valid. We're likely about to sweep the lows. Probably headed to new lower lows. Which is, I don't want to say that's my base case, but it's probably the most likely to happen because we're in a bear trend. Right now, I think it's pretty equal. Do we have one more leg up or do we immediately go to the lows? I think it's a pretty even chance right now. So that's what I'm looking at. So we'll see. Obviously, still up in the air. That would give us a target of roughly like 19,000 to the upside, or potentially, again, retest of like 15.7. On the 4 hour, we got a bunch of green histograms, hard buy, coming out of the bearish control zone. I mean, still below all of the moving averages. 200s have just flipped bearish. It looks very bad. We did build up a decent amount of momentum on that bounce and everything, but looks pretty bad. Looks pretty bad. This is basically the line in the sand. If we don't hold 16.7, this market is going to retest the lows, probably to new lower lows, because a lot of people bought here thinking we're going to go higher and now are, not in a good place. Not in a good place. What if we do a little Fibonacci from the high to low? So yeah, okay. So we got up to the 382, a little bit above it with some wicks. A move slightly higher to the 0.5 would be like 18,350. A move to 618 would be 19,000. And that would be a backtest of 200 exponential and simple. Not crazy to think we get there on a long enough time frame. So don't want to get overly excited about it right now. But I mean, if this support holds, it's not crazy to think there could be another 15 to 20% to the upside from where we're at right now. Now, the thing that you have to remember, though, is, 15 to 20% to the upside from where we're at right now would be basically, a back test of 19.2. So that's 15%, 19.2. A back test of the breakdown. Maybe not even 19.2, maybe 19. Let's just say 19. We're going to move back up. We're going to back test, hit our head on what was support, and we're going to make sure it's resistance. And if it is resistance, we're definitely going lower. If it's not resistance, though, we're going to reclaim it, and then we're going to try to go higher. So we don't know which one's going to happen. Maybe this is the macro low. This was the big drop, and then that was it. We shake out the last people, and then we're going to go higher from here. There's an argument to be made for that. Only in time will it tell. That's not my base case, obviously. But, you know, if that happened 6 months from now, and we said, oh, that's crazy, and now we're back at 30K or 50K or whatever, I wouldn't be surprised. I would be like, well, I can probably tell you what it looked like on the chart relative to moving averages and, you know, support, resistance, etc. We could definitely build a case for that. So we don't want to get overly bearish right now after the move that we're expecting to happen. We don't want to get overly bullish right now, obviously, but we had an aggressive move down. We had a dead cat bounce back to the upside. We have a retracement of that dead cat bounce. Not crazy to think we now have continuation back to the upside. Not crazy to think. So that's what I'm going to look out for. You know, obviously I'm not getting bullish right now or whatever, but there's some opportunity regardless of direction, regardless of bias. There's opportunity in volatility. And that's what we're all about, obviously. Volatility. If it goes sideways, nobody makes any damn money. Well, I shouldn't say that, but it's a lot harder. So this still looks very bearish on the weekly. Obviously, it looks very, very toppy. Looks like we're coming down. Tried to build up a little bit of strength right here. And then, again, what do we say? We're using all of our energy. The bulls are just hanging on to the edge of a cliff by, like, you know, first it's 10 fingers, then it's 9, 8, 7, like in the cartoons. And then eventually you're like hanging on by just that last finger, and then you can't hold on any longer. And that's exactly what we've been saying leading up to this. We talked about the trapdoor. We talked about how we're spending. The bulls are spending all their energy going sideways. Eventually, they can't do it anymore. They have to either crawl up off of the ledge, get up off the cliff edge, and crawl back to safety, or they're going to fall. And we know what happened, obviously, in real time. They fell. The bulls fell. Crypto fell. It is what it is. So is it going to keep falling? Or is it going to backtest the breakdown? Man. If I knew that, I promise I would tell you. Could go either way. We built a strong case, I think, for each. Monthly looks absolutely horrendous. I mean, we know. You guys know where. I've been saying it now for a fucking long, long time. The crutch has broken. The woodchuck is chewing away at it. And we're falling to the ground. And the ground is at 14,000. So that's what I'm expecting. Now that we go to 19,000 first, definitely a possibility. Definitely a possibility. But it seems pretty clear to me we're headed to 14. It's very hard for me to get bullish on these markets right now. But, you know, after like 20+% down to like 50+% down on a lot of these assets, it's crazy not to take a counter trend backtest play, which is essentially what we did. So we closed the ETH short. We took part of it at 1, 2, 3, 4, and then we closed. I can't even remember where it was. I told you guys it was like 11 something or whatever. So we closed that ETH short. Took some scalps back to the upside. Obviously, it was the right move after this very aggressive candle. I mean, that would have basically dissolved half of our trade if we didn't just take profits on that. So we're back at, you know, this is it. This was support for a while, and then we moved to the upside and put in another lower high, and then we broke down through that support, and now we back tested that support. The support is now acting as resistance. So this is it. This is the SR flip. This is what we've been talking about. I just need to delete all these charts. They're just all so ugly now. Obviously, we had this channel right here. We broke out of the channel, and we took an Ethereum, you know, we rode the Ethereum wave to the upside. And then we came back down, and that channel was acting as support. And then finally it broke. So the argument, the story that we had for Bitcoin is the same story that we had for Ethereum, where we could be potentially, you know, getting like the 4 back test, though, like 1, 2, and then it holds above there, and then we get a 3 to the upside, we continue up. But what happened with Ethereum was it broke down. So it lost the top of the 1 with the bottom of the 4. We don't want to see, you know, and that was the other. We deleted it to try to simplify the charts after it broke down. But that was basically the second scenario that we had, which was this. We basically have a 1, a 2, a 3, all the way up to here, a 4 back test right there. It holds, and then we go higher for the 5. That's what we're hoping for on the short term for Bitcoin. That's what we were looking at potentially for Ethereum. Even though that wasn't our base case, there was still a strong argument that it could have happened. And it was very close, and then it failed right here. But this obviously invalidates it because we lost that. So now we know there's no chance. It's not possible that that's what's happening. So we'll look for the same thing on Bitcoin. And that's where we're, it's basically just the same trade. And you're like, everything's always the same with you. Why do I even watch you? And I'm like, I know, right? Now that you know everything, you don't need to watch me. So high five. I did it. We did it. You know it. That's the whole point of this fucking channel. To do the same thing over and over again so many times that people see it work and they go, oh my God, I can just do that and I don't even need you. And then you're like, haha, fucker. And I'm like, oh God, no, I lost one watcher. No, I mean, that's the whole point. We're learning to fish here, okay? And you can see in real time when I make mistakes too, because everything's documented. Like if I was like coming on here all the time and I was wrong, you'd be like, oh, this guy's wrong all the time. What an idiot. But instead, we just get lucky over and over again. Now we're due to be wrong big time about some stuff, okay? We're due. We're not going to get lucky like this forever. You can't literally bet on stuff that's 50-50 over and over and over again and continue to be right. I mean, you can. I love roulette. And, I've seen like black and green hit without any reds for like 40 spins in a row. And you're like, that's impossible. It's 50-50. I mean, it's fucking nuts. But, I mean, that's what we've been doing. We've just been calling these coin tosses over and over again. I guess just getting lucky. I mean, we got the 8-ball, though. That's a big thing. It's a big factor. Weekly crypto chart. I mean, does this look good to you? No, it's melting down. We broke down from key support. We put in a new low on the wick. We're at a new low on the... I mean, this obviously won't close till Sunday night. But, I mean, we're at the lowest low we've been this whole entire trend. So, not cool. Obviously, we need to hold above $750 billion. $1 trillion was resistance. Completely smacked us down. Yeah, I mean, it looks bad. Looks like it's ready to roll back over. Bitcoin dominance on the weekly. I mean, look at this, though. Again, just further proving our point that nobody gives a shit about Bitcoin anymore. Bitcoin dominance at the lowest low it's been at in literally years. Matter of fact, the only time it's ever been lower was at the absolute peak of the 2017-2018 bull run. So at the last minute, when alts were surging and Bitcoin had already topped out, it went from here to here. Well, it was arguably from like here because it was December 2017. So this was when Bitcoin topped to when we get a big surge from the altcoins continuing to the upside for like a month or two. Some of them more than that. So here we've basically just been going sideways and they're continuing to go sideways. So again, the likelihood seems Bitcoin is weak now. The trend is to the downside. Now, we've talked about the two different charts. This one has everything. If we go over to the Bitcoin dominance chart without the stable coins, we get a little different of a picture. We're not nearly as low right here when we take out the stable coins. So stable coins are kind of skewing the picture, is what it comes down to. When we look at it with the stable coins, it looks like Bitcoin is the weakest it's been in the whole trend. When we take out the stable coins, because they're, a lot of that money has flowed from shitcoins or from Bitcoin into stable coins and is sitting there. Now, as the DXY continues to weaken, if the DXY continues to weaken, that's likely to change for two reasons. One, because a lot of the money in those stable coins is speculating on dollars. Very cheap, very easy, very free on many exchanges. So that's what's going on. So if the dollar's weakening, people want to get out of those positions. So if you're pegged to the dollar, you don't want to be there. So maybe you come out into your native currency. Maybe you go into Bitcoin. Maybe you go into a shitcoin. And this chart right here is telling us, basically, when we take out the stable coins, so when we take out the dollar strength that's skewing, where people put their money, Bitcoin is actually strengthening compared to shitcoins. So people are starting to lose faith in these random shitcoins. Starting. Still very, very weak. But if the dollar weakness continues, that may change very, very quickly. Very, very quickly. So definitely at a breaking point, potentially, for some key levels. All right, so on to cheese next. Chili cheese dog. What did I do? Load up a different chart or something? Dear God. Why do we even bother drawing on these? All right, I'm done drawing on charts because whenever we come back to the chart, all the drawings are always gone. Or there's just too many drawings. There's never the right amount of drawings. Does anybody else feel that way? It's always too much or too low. So let's start from scratch here. Obviously, we had a key resistance, a key lower high. If we go from the macro high here to the macro low, We have our very, very clear levels, obviously being very well respected. The 618 just rejected us. We found support at the 200s and the 382. This is one of the few that's still above the 200s. So as long as it's above the 200s, this looks okay to me. Now we're seeing some weakness. There's definitely a possibility. Getting ready for a big breakdown. I'm looking at 13 cents for an area of interest. If we hold above the 200s though long enough and crypto turns around, maybe this looks okay. Reminds me a lot of Matic, which is one of the better looking cryptos. So Solana had a complete meltdown. Basically went down by 66% in a couple of days. Oh, sorry. That was a moment of silence for all the Solana bulls. I mean, it sucks. Obviously, complete meltdown. But, I mean, the fundamentals, I'm sure, are pretty good. So, Link. Chainlink looking pretty rough right here. Broke back down below the 200s. I mean, came back down and retested the bottom range. I mean, this looks so damn weak. It's scary. This is so weak. I mean, if we lose $5.70, we're talking about end game targets here. $3 hollows. Okay. We rode this thing up from like $2 back here all the way to the top of the range. Sold this trash at like 40 bucks. Okay. And back then, Chainlink was good. It wasn't even trash because the chart actually looked good. And then it just got absolutely wrecked since then. I mean, if this isn't the perfect example of how the mighty have fallen. Chainlink was literally like, people were talking about how this is the best crypto ever. It was going to change the world. And now it's literally melting back, about to get back the entire bull run. What does that tell you about sustainability of all these cryptos? If the good ones look like that. And you're like, well, Chainlink is shitty. XRP is good. And you just don't get it. Okay, buddy. Okay, guy. Avalanche, AVAX, absolutely terrible. I mean, new lows recently on that, at like the lowest low ever. I mean, there's 2 daily lows right here. So you're like, we're not at the lowest low ever. Well, we're pretty damn close. This thing looks so bad. So fucking bad. If you want to speculate on a crypto right now, honestly, while we're like just melting down, just pick ones that at least look different. I'm sorry, decent in my opinion. Like, don't pick the ones that just look like full-on meltdowns. If it just put in a new cycle low or a new lowest low ever, now is not the time. Now is not the time. Don't get me wrong. I'm guilty of bottom feeding, okay? I do it in crypto. I do it in stocks. You know, I've been known to do it at a bar or nightclub during my heyday. It happens, okay? Sometimes you just want to get your nut. But the truth is, now's not the time. Mid-meltdown. And you're like, that's when I buy, is when there's blood in the streets. This isn't blood in the streets. I mean, this is like, people have been saying it's blood in the streets the whole way down. We'll know when it's blood in the streets. When we see wicks and stuff like this, that's blood in the streets. This is not blood in the streets. This is a slow, controlled demolition of an entire asset class. So Polkadot looking real, real rough. Almost to our target. This is 786. This is it. I mean, we're pennies away from touching it. Massive volume spike right here. Maybe this thing is bottoming. I don't know. People are trying to buy it off this support for sure. Me personally, I'm looking for a breakout of the descending channel first. I mean, a breakout of descending channel is going to give us, let's say this was the bottom, and we are going to get that. It's going to give us something like 130+% move, 200% move, something like that. You know, just a measure move of the breakout, roughly, of this like channel slash descending wedgie slash whatever you want to call it. Okay, something like that, 100 to 200%. But is now the time we're going to break out? We don't know. We don't know. So sure, you're buying the lowest low ever. You're getting the best price anybody's ever gotten on this since December of 2020. But I mean, so this guy got the best price anybody got since January of 2021. And since then, it's down 50%. So does this go to $2.75 and then you get the best price, you know, ever on this chart? I mean, I wouldn't bet against it. So that's all it's been doing, is just putting in new lows. All right, so speaking of something that actually looks decent, so Matic, again, same thing. We had this ascending support. We broke down from it. We immediately reclaimed it. You know, lost support, regained support. I mean, technically, the support kind of held, depending on what time frame you're looking at. We broke down through it. That's bad, but we immediately reclaimed it. So now the key thing to look is, do we take out the 618? If we do, Matic headed up to like $1.80, I think it was. $1.80, yeah. $1.80. And I mean, this chart starts looking real fucking good if Matic's back at $1.80. Real good. It's back above the 200s. It flipped the 200 exponential blue, found support at the 200 simple. I mean, this is That's what you want to see. There's still a battle going on. Here, there was a battle going on to see if the Bulls could take control. Now the Bulls are in control and battling to maintain control. And if they maintain control long enough, we're going to hit $1.78. So again, if you're going to bet on a crypto, I'm not saying you have to buy Matic. I'm not saying you have to buy, cheese. Okay? I mean, you do have to buy cheese, obviously, because it's amazing. Like the food, not the crypto. But why not speculate on something where the chart actually looks decent? Like everybody was like, oh, why are you buying Litecoin? Oh, Litecoin's trash. And I'm like, yeah, I know, but look at the chart compared to every other crypto. This is in the bear market coming out of like 2019. And Litecoin goes from like fucking like $17, I think I bought at, or $18. And it shoots up to like 100 and it was like 75 almost right away. While all the rest of cryptos look like trash. Because that chart started looking good. So I was like, I kind of like this. Litecoin's looking pretty good. Same thing that's happened a bunch of times with Ethereum. We just look for the charts that start looking good first. Even if they just move first and then underperform, we locked in those gains and then we can go, spread the wealth. Feed the geese. You know what I mean? Wait, no, feed the geese. Never mind. That's different. That's a different expression. It's not the same as spreading the wealth. I mean, arguably it is. So BNB, okay, look. CZ is playing a dangerous fucking game right now, okay? He looks like a power player right now. He looks like a pimp. He's got Sam Bankman-Fried bent over. Destroyed that man. I mean, he literally separated the men from the little boys. He won the war. The question is, though, he won the war against Sam Bankman-Fried. Is he going to win the war against reality? Because this is the edge. This is the edge of the cliff, okay? And this is BNB literally on the edge of the cliff. Now, obviously, we have talked about it quite a few times. There's still a little something down here. There's still a little possibility of a life-saving, slightly lower move. But the truth is, this is the edge of the cliff. And if Binance doesn't turn something around, if this bear market doesn't end, if, whatever potential scenario that's going to blow up the crypto market or save the crypto market, we're looking at a pretty violent move down. And you could argue, we brought up the monthly a couple times, we're talking about really like the 40s. So I'd be real, real careful with BNB. And the truth is right now, is CZ really only fighting, or was he only fighting with Sam Bankman-Fried because they're both desperate? Probably. Because when things are booming and finances are good, they don't have time to bicker with each other on the internet. But when shit hits the fan, aka the crypto snake starts eating itself, that's when you see these little fights. That's when you see the Roger Veres and the Craig Faketoshis, allegedly. So FTT, thing is trash. We talked about this though. Went down over 90%. And we said there's going to come a time when this thing is going to bounce. And what happened? It bounced over 100% back to the upside. And then gave back the majority of that bounce now. Now, maybe it goes higher from here. Maybe it goes lower from here. We don't know. But we know that it's trending probably towards zero. Because, obviously, bankruptcy. Ponzi scheme. Insert random, super aggressive scam word here. Okay, what do we have? Oh, that's right. We got PBR, the beer, right? No, the crypto. Damn it. Got me excited there. Big D says, what are you looking for? Is the object tree icon on the right bar second from the bottom? I know what the object tree is, but for what? Stacking papers, all your drawings hide there. Check it out. Oh yeah, for time frames. I have them. Sometimes they're hidden on time frames, but if I switch between like a daily, weekly, monthly, they shouldn't be hidden because everything is set to either be hidden on a daily, a weekly, or a monthly. But like sometimes they're legit, like just gone. Like it'll be one little box or something like that. But you're probably right though. Sometimes it definitely is me getting out tricked by myself on the object tree, for sure. For sure. All right, so let's look at these last couple amazingly awesome assets. slash potential hot mess expresses. So PBR, so, clear uptrend here, obviously macro downtrend. So, big uptrend, meltdown, continuation of that uptrend to a lower high. So that is worth note that it did put in a lower high, which is obviously not a good thing. We have pretty clear, some kind of ascending support or channel or something to that effect. Clearly just trending up here. And now it looks like, depending how you draw this, depending on what time frame you're on, when in doubt, zoom out or in sometimes. Sometimes you're too far away, you want to get closer. Sometimes you're too close, you want to get further away. If we go by closes and just try to get a kind of accurate picture here, we got kind of something like this going on. And then if we do the same thing on the bottom, yeah, we kind of already had it pretty much. Arguably, if it was closes, it should be something like this. So realistically, you could argue that we had this nice little trend to the upside. We broke down from it. We tried to reclaim it. We got rejected, and now we're breaking down lower. Now, some people are going to look at it how we just had it, more like this, and say, it's something like that. Either way, we're basically have or are breaking down from key support. So this thing went on a pretty epic little run up here, and now it looks like it's headed down to the lows. And because of whatever I did earlier, all the indicators are gone. So whatever that fiasco was where I full screened the chart and couldn't figure out what the hell was going on. Hey, can you tell me how to fix that in the future? What the hell did I do? Regardless, there's no more indicators, so we're screwed. But honestly, this thing looks like it's ready for a big leg down. And if we just assume we're going to get just a modest measure move, from the roughly top of this pattern to the bottom of the pattern, I mean, this thing could get pretty nasty. And then if we want to see for some confluence, based on the low to the high right here, and we look for some fib levels, the next level we're looking for is that 382 at about 950. And then after that, the 0.5 at about $8. So it seems like it's going, we're at about 1150 right now. Seems like it's going to 950. And then after that, probably bounce a little bit and then make its way down here to the 0.5. Which is, what I say, $8 and roughly like 20 cents, somewhere around there. So that's what I'd be looking for. You could argue too, obviously we topped out right here. We could draw a fib from the top right here to the bottom right there and then just drag that out and see if that gives us like a drastically different picture. Obviously all the levels are just reversed and slightly different. So as this develops, we can look at it and say, okay, maybe we want to be like a little more like looking for zones than like just a hard target, because this could be the 382 or the 618. This could be the 0.5 or the 0.5. This could be the 382 or the 618. So, obviously like inverse, but slightly different. So that's what I would look at. All right. And then last but not least, we got CVC. All right. So we have going back to May of 2022. So this is a relatively new listing for this crypto. Is there a better chart to look at than this? Or did they literally just invent this? So far, I would say things are not going great. It appears that there is zero liquidity. It's not bad. 192% pump rejection 3 days in a row. I mean, it's 9 cents and it went up to 30 cents. So it's not like crazy, but I mean, still though. I mean, it's just melting down. It's a series of lower highs and lower lows, basically, right? I mean, arguably, you're like, well, no, that's higher. I mean, you got to count these crazy-ass wicks, I guess, right? I don't know. This isn't really, like, there's nothing you can really do, like, technical analysis for on something like this. I mean, it just looks terrible. Just going down. Like, it's pretty clear. Regardless of how you draw this, how you look at this, what lens you look at it through, whatever, this is the overall impression that you're getting. Is like, hey, look, the longer this asset exists, the less valuable it is. Therefore, do I want to own something that in the future is going to continue being worth less value? No, obviously not. But I mean, we are near the bottom of the range. So, I mean, like, fuck it. At 7 cents, like, I mean, is there a scalp at 7 cents? Back to 10 cents? Yeah, 46%. Or back to 16 cents, 100%. I mean, sure. I mean, now let's keep in mind, if it breaks down from here, I mean, we don't know where it's going. Maybe it goes to 0, maybe it goes to 3.5 cents, maybe it goes to, I don't know. So, I mean, how can you trade this functionally? Because your super site stop just probably gets like stopped out immediately. If you try to just market buy in here, there's no liquidity, so it's probably just going to surge to the upside. So how can you trade this? I mean, it's not going to be easy. Let's be real. It's not going to be easy. But, you know, if you end up in a decent situation down here with the proper risk management and you say, okay, I'm going to buy the lows down here at like 7 cents or wherever it stops, or I'm going to look at, you know, 15 minutes for a bullish divergence or something like that. There's an argument to be made that you can find like a 10 to 20 risk reward trade setup here. So now, granted, you know, only trade with enough money that when it goes to 0, you're not even mad. You're not even sad. It's just kind of like a funny story. And you're like, oh, yeah, I was speculating on some CBC and it went to 0. Ah, could have went up double, though. Could have went up double, but it did go to 0. If you can laugh about it, your position sizing was correct. All right, we made it to the end. I think we can go ahead and wrap it up there. It is 12:54. Yeah, so what we go about? Yeah, about 2 hours. I've been a little slack lately. And by slack, I mean I've been going like an hour to hour and a half instead of 3 or 4, which I think is ideal. I think people prefer that. Obviously, when there's a bunch of excitement going on, I can just shift a little bit more of the time towards that asset class or whatever. But, I mean, market wrap up, though, for this week. So we saw weakness in TNX and DXY. As expected, clear breakdown, back to support. No surprises there. We saw risk on assets surge. And, you know, that's what we want to see. We don't know if it's sticky yet. We don't know how long it's going to last. Obviously, crypto, unfortunately, missed out on this rally because of the, you know, cat fight or girl fight or nerd fight, whatever is going on between these two little queefs. They're both bums, in my opinion. Both bums. And probably both of them will get what's coming to them. Now, is Sam Bankman-Fried an actual criminal and going to go to jail? I don't know. I haven't seen the books. I don't know exactly what he was doing. There's definitely, I mean, depending on where, I can't remember where FTX Global is like incorporated, but I mean, depending on let's be real, okay? There's a lot of crazy laws that seem ridiculous, but are still legal. So is there a possibility that Sam Bankman-Fried was basically using clients' money in a separate company of his to trade risky ass cryptocurrencies and then actually like isn't a good trader, is only a good arbitrager, so lost everybody's money? Is that possible? Yeah, it's very, very possible and very, very likely. It seems like that's exactly what happened. Now, did he actually break the law? I mean, I don't know. I haven't seen what FTX says when you deposit money on their exchange, but there's a possibility that they say basically that they can do whatever they want with your money. I don't think that's the case. There's also a possibility that if you were receiving some sort of interest or something like that on your money, that you basically agreed that they could loan out your money and that he just loaned it to himself under a different name, different business, and lost all your money. You know, which is also possible and potentially not illegal. So is Sam Bankman-Fried actually a criminal? I don't know. That's up to, you know, the courts to decide. Does it sound like he did a bunch of shady stuff? Did he definitely do people dirty and make poor decisions and expose himself as a bum-ass piece of shit? Yeah, that's all factual. We know all that. What we don't know is, did he actually break the law? So we'll find out. But I'm going to tell you right now, his little dumbass before Congress testifying about stuff and talking about regulation and stuff like that, better hope he wasn't lying about shit, because, I mean, I saw some of those interviews and, I mean, they're talking about crypto regulation and he was making claims about FTX and stuff like that. You know, big deal. If you're the wrong person and you lie in front of Congress, it's a big deal. Now, if you're the right person, we know how that plays out. No one gives a shit. So, I don't know. We shall see. But I think presuming that he's a criminal is not a good idea. But did he do shady ass stuff? Is he a horrible businessman, making terrible decisions with customers' money and completely fucking them over and destroying credibility in the already very credibility lacking crypto space? Yes, those things are all facts. Those are all facts. He's a plague on crypto and exploded in real time. And will Binance be next? I mean, it's going to be exciting to watch it happen if it does. So we shall see if the snake continues to eat itself and CZ is next. But going to go ahead and wrap it up there. Appreciate everybody tuning in today. Happy Friday, everybody. Enjoy the weekend. Going to be a fun weekend. Should see more crypto volatility. Obviously, some strong closes for the risk on asset markets and weak closes for DXY and TNX. Seems likely we're going to close at support on those. So that could be a big deal. It's going to print a lot of strong, data. Basically paint the tape in a very bullish way for the Dow Jones and some of these other assets. So we shall see. Very unfortunate crypto missed out on this rally because of, the snake situation. But that's it for today. Obviously, it's not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research, trade responsibly. Crypto Trend Trader with our Friday morning market wrap up. It is 12:59 p.m. Eastern Standard Time on 11/11/2022. I am, of course, Crypto Trend Trader. That's it for today. I appreciate everybody tuning in. Check out the stream on Sunday evening and Wednesday evening from 8 till 10, or every Friday for the members only public stream that anyone can attend from 11 a.m. till 1 p.m. That's it. Remember, it's not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research, trade responsibly. Crypto Trend Trader, and I'm out of here.